Pradhan. I have the privilege now to invite our chief guest, Sidharth Rath, Managing Director and Chief Executive Officer of SBM Bank of India Limited. I will get a lot of time to say what is Sidharth Rath has really gained in last 30 years. Rath is a senior banker with nearly 3 decades of experience in the financial sector. Rath is the first MD and CEO of SBM Bank of India. He is the first bank to get a universal banking license through the wholly owned subsidiary mode of a foreign financial institution, SBM Bank India, with commercial operations.
ఆ అకౌంట్ కు వెళ్ళలేదు, ఆ అకౌంట్ కార్డే లేదు.
కార్డు కూడా చేస్తే కూడా డేంజరస్ తెలిసిన
కార్డ్ పేమెంట్ కూడా డేంజరస్.
Sorry, can people go on mute, please? Thank you.
Prior to joining SBM Bank of India, Mr. Rath had been with the Axis Bank, where he served in the capacity as a group executive and head corporate transaction banking and international banking. Mr. Rath in the past has been member of the Security Exchange Board of India, the Corporate Bonds and Securities Advisory Committee, and the advisory board of the NSE Clearing Corporate Limited, NSCTL. I once again welcome Sri Rath to the forum. Thank you, Rath.
Thank you, Dr. Chaudhary. Thank you so much. Thank you, Dr. Pradhan. Thank you, Mr. Murli. And my special thanks to PRMIA for inviting me to this event in this evening. Good evening to all of you, esteemed audience who are there. When I was going through PRMIA background in India and the way it has evolved, I must congratulate all of you for the role you have initiated, all of you founding members of this Indian chapter of PRMIA, to take it forward. I think this is something which is much needed in this country. As a institute, I think this is going to play a very key role going forward. There is definitely a need for an alternative institute to come forward, and that is where people like us have an option to look at. So thank you once again for initiating this PRMIA India chapter, and also initiating these webinars to have an interaction in this evening to increase our knowledge, share our knowledge, and discuss contemporary themes which are there. I was hearing from Dr. Chaudhary about India progressing well ahead, and especially in the last few years to become a startup hub. Yes, it is happening, and we all know that enterprises have to be created in this country to create value. If the economy has to move, and if the government of India is looking at creating a $1 trillion economy in the next 3 years, 4 years, 5 years, there could be. But yes, we are on the way to becoming a $1 trillion economy. There is no doubt. It's a question of time. It could be 5 years, it could be 6 years, but the country is definitely ahead. And the demographic profile of this country is such that the growth has to be there, where 50% of this country is below 25 years. I keep on saying this to my friends, my colleagues, and people I met.
He has built all security. And ATM lo chaala kashtam least secure Paytm.
Admin, can you please?
Excuse me.
No, not an issue.
I request Priya to unmute everybody other than speaker. Priya, please.
So where the demographic profile of this country is going to drive the growth, where the mean age of this country is 29 years and 2/3 of this country is below 35 years. That definitely gives us a lot of opportunity, lot of hands, and literally lot of hands to take this country forward. I think the growth is going to come. Yes, the rate of growth might vary, and we all know that the government of India is pretty serious to see that enterprises grow and flourish in this country. And when you look at enterprises, we have to start somewhere. So startups comes into play. And we have seen over the last few years how some of the startups, especially in the fintech space, and being again a startup bank and a new bank, we deal with many of them. for furthering our business and collaborating with them the way they have been thinking. And as I was going through this subject of this particular webinar, startups fueling the India growth engine, risk management for aspiring unicorns. Everybody today wants to become a unicorn. Everybody thinks that it's only a question of time. Why shouldn't I become? And when I meet some of these people, especially from the fintech community, they're very sharp and bright minds. They think differently. And for them, the sky is the limit. And they think growth is something which is bound to happen for them. And they are going to create that value. But this chasing the unicorn dream and chasing it aggressively, sometimes as a banker, when I put on my banker hat, and obviously being a career banker for almost 30 years now, and we have learned it the hard way also, that risk is something we cannot ignore. And risk and the larger governance framework, which is something we cannot ignore. This is something we cannot afford to just bypass or shove it aside. So when I was going through the subject matter on risk management for aspiring unions, I think this is a very interesting and very contemporary theme, which is very important in terms of how to manage risks in this environment. And the environment, as you all know, has been fluid. And last 1.5 years, it has taught us how uncertainties can come before us. But taking that apart, if you look at carrying forward the unicorn thing, where we have India has become one of the largest base for unicorns globally. And I was looking at some reports where there are 20 plus unicorns in this country who have moved over the last 10 years, last decade. The largest being a Paytm in the fintech, which is valued at upwards of 15 billion, or in other space like a platform like Zomato, which recently got listed, we all know, today having a value of again close to around $15 billion. This all started over a decade back. And the way they have moved, obviously, they would have done something right. They would have looked at the gaps which are there, the opportunities which are there, the latent demand which has been there, and that is where they have gone and filled it up. And as we look at, especially in the fintech space, over the last few years, more than 20-25 billion has been invested. It has come here. And especially during the current year itself, upwards of 10 billion has been invested in this space. This space attracts also a lot of capital. And we have seen multiple enterprises in the fintech space, for example, over payments, neo-banking, remittances, risk management platforms which have come up, again as startups, using analytics, multiple areas as we look, card products, wallets, so on and so forth. It can go on. Multiple areas people have come in. They have brought in very unique product propositions. They have innovated. They have leveraged technology. They have used analytics, and that is how they have moved. So, and this is not restricted alone to fintech. Fintech has been attracting maybe a lot of news because of the kind of value they command, but across spaces I see, in different industrial segment, I see people have been doing good number of work to create value, be it in the logistics space, be it in the agriculture, agro-food processing space, be it in the textile space, multiple places, multiple sectors, segments, people have been working on to see how we can create value, how we can, one, contribute to the growth of this country, create jobs, create a ecology in the local system. That is how the things have been moving. But at the same time, when we look at the way people have been moving, and we all know that change is bound to happen. Change is something which is inevitable. And it's often unexpected also, as the pandemic has very amply demonstrated. And the best and the most effective risk strategy for any organization or any entity, enterprise, or as individual is to create a culture that fosters adaptation to evolving situations. And that is where the first step of risk management comes in. As you create a culture within yourself, for our entities, and that fosters adaptation to evolving situations. When I think about risk as a banker, obviously it is scary. And it is scary to think about risk because risk today is not, unidimensional, or there are few segments. Risk has come to hit us from various fronts. And again, the current situation that the globe is going through is something which none of us had thought about 2 years back. None of us had thought about that this is a situation that the entire world is going to go through. And none of us were prepared for this, how to handle this risk, how to mitigate this risk. And if I look at the startup community or the startup environment as such, if I look at it, this is where people who are coming to set up enterprises, obviously they have to take a risk. Without risk, as you all know, there is a risk return framework which is there. If you take no risk, there is no gain. No gain without taking any risk. And we also see that when somebody is setting up an enterprise, and history tells us that more than 50% of the startups or the entities, they fold up within a couple of years. Another 20-30%, they just drag on for another couple of years. And what finally comes out as a well-run could be about 15-20%. And out of that, if you look at in the final analysis over a 5 to 10 years period, maybe about 10% which should have been successful meaningfully. So out of 100 enterprises which come up, hardly 4-5% would be successful. And another 5-6% could be which is running meaningfully. Others fold up or they just drag on. So when you look at growing an enterprise, creating a successful enterprise, creating value for an enterprise, risk management is something which is we cannot ignore. It is very much inevitable. We'll have to do it. And when you talk about risk management, I also wonder at times, what is risk management? Risk management, whether it's an art, whether it's a science. Many times I also ask, my colleagues, my friends, what is risk management? Is this an art or is this a science? And, from what I have gathered, risk management is both an art and a science of thinking about what could go wrong and what should be done to mitigate those risks in a very cost-effective manner. Why risk management is an art? Because you have to assume those variables, and those variables are not typically science. But the probability of those assumptions of what could be the risk is definitely a science. And there are multiple theories and equations which are there and which are also in a banking industry, the regulator has also prescribed to measure risks and mitigate them. So while assuming or identifying risk and figuring out how best to mitigate them, anybody has to first, of course, need to have a framework for classifying this risk. And the way I have looked at it, and what in a very simple way, if I have to look at it, risks have two dimensions. One is, of course, the likelihood of occurrence of that risk, and what would be the consequence, what would be the severity of the potential consequence of those risks. This is the way we'll have to look at it. And then we'll have to address it in various formats, how this risk we can always classify. And from a banker's perspective, of course, we look at various things in terms of how to address those risks. What are those risks that is acceptable? It is not that we can mitigate all risks which are there. We have to also accept some of the risks and carry on. And if you look at those, one of them is, of course, risks which can ignore. Risks which we can ignore, risks which are in terms of the probability of it happening is very less. We can ignore and go ahead. And this is something which we'll have to live with it. And this is something we can afford to also take it along with us. Then of course, there are certain risks which are there, these are nuisance risks which are there. An entity forgetting to file its returns, forgetting to pay its taxes, forgetting to deposit its PF, statutory obligations which could be there. These are nuisance risks which has to be addressed, and these are a simple way of doing it. If I have credit card bills to be paid, I have given a standing instruction. If I have utility bills to be paid, there are standing instructions, debit instructions which are there, so that I don't have to think about it. This could be of regular occurrence, so that I can address it by building in mechanism, calendarizing it, so that it gets done. Then of course, there are insurable risks, which Dr. Chaudhary, our friend, is an expert, and he has looked at this in various ways of how to insure risk. So his role is to basically identify those risks and see what are the risks and how much it can be insured, including advance loss of profits also. How to capture what is the, what is the, then you will have to look at what is the premium I am paying. Is this premium something which is required, or this premium which is effective to take an insurance? We all do our life insurance. We also have started now doing general insurance for valuable products, be it electronics products, household white good products. We started doing it now. These are not there. 10 years back, we didn't take household goods insurance. We never took. Life insurance was something, yes, we took if it was absolutely necessary. And today, life insurance is something we took with various combination of products, investment linked and various annuity linked. So, so these are insurable risks for which you pay a premium, and for which we can always look at saying that, okay, fine, I am mitigating it by paying a cost, and that cost is covered as part of my operating cost of the business. But the more important risk, which is the most important, are the killer risks. And this killer risk can wipe out startups. It can also wipe out Fortune 500 companies. We have seen in the past global, huge, large multinationals like Enron going down. We have seen in the financial crisis how some of the larger banks which one never thought about going down, be it a AIG, be it a Wachovia, be it a Merrill Lynch. We saw how these enterprises were affected. And the multiple cases where businesses have collapsed and they have vanished within no time. And this is where it is important for all of us to see that what are the kind of risk management strategy, and what are the way that we have a kind of a risk reward objective. Classically, if you look at, over the last 15-20 years, being a banker, a typical risk which a bank used to take is a market risk, an interest rate risk, a promoter risk. But as we have moved, the risks also have evolved. We have got more complicated risks coming in the system. We never talked about regulatory risks coming in, legal risks coming in. And we have also seen judicial risks coming in. We have seen the sovereign also becoming a risk at times. We have seen as banks where licenses were cancelled in the telecom segment, in the mining segment. These were never risks we ever thought about in our life earlier. Then we have also seen about how technology is becoming a game changer, and how learning to live, I as a bank, as a new bank, and similarly other entities which are there, how to stay ahead in the technology curve. Then there are, of course, the operational risks which are there, the financial risk one has to take, and over and above that, there is a systemic risk also. This is how typically we have to look at risk, and this is how we'll have to look at addressing also some of this risk in terms of measuring it, in terms of finding mitigation for that, and also look at which are the risks we can afford to take. Now for startups or enterprises which are emerging, it's become very important for them to look at the proactive risk management, which helps them, one, in becoming future-proof for their business success. Second, looks at driving their revenue, create valuation, and also at the same time, looks at getting the clients, attracting client and retaining the client. So proactive risk management always leads to also a good business. That is first thing which you have to look at inculcating in all business, be it a startup or be it a large entity, enterprise. And this is where an organization like PRMIA has to also play a major role. One, in inculcating a risk management culture, which is very important for all of us. A risk management culture and a broader governance culture. When you look at a startup, when a person is starting, what does he know about risk management? It's a single person who is starting an enterprise. Does he have that skill sets in handling risk? Does he have that expertise in handling that risk? No. And the various risks we talked about, which is hitting us from across various dimensions, they don't have a clue. And this is where my request to PRMIA would also be to step in and see that where we can play a role in mentoring them, in helping them, in understanding and identifying the risks. We have today also a new dimension of risk, which is a cyber risk, which has come up. This was again something which was not there a decade back. And many we have again seen businesses households which are faced with hostile cyber squatters coming in, which are held hostages, and they have to pay through their nose. This is where specialized organizations have to create effective help and mentoring. Because these are people who can't go to afford to take a cyber risk management and engaging the likes of, let's say, the big fours to help them out. This is where we'll have to look at creating a kind of, again, internally a support group in helping them to grow. Third is important again for them is to stay apprised of the legal and the regulatory framework which is there. This is again when I see some of the startups across various space, not only the small fintechs which are there, across the space where they are not clear about the legal and the regulatory framework and the obligations which arises from them. Unfortunately, as a country, we have still not evolved in making it simple. It is a quagmire for many of us when we try to navigate through the regulatory obligations which are there. And at times they are complicated and confusing, and also at times we see that many of them are at cross purposes. This is where my request to PRMIA will also be to see that how we create again a support group, how we create a dedicated team to help the startups, one, to look at the regulatory framework, the legal and regulatory obligations which comes out of it, to look at the new emerging areas like cyber risks which are there. Then comes, how do you manage your reputation? Reputation risk is also something which is becoming very important as we move ahead. As smaller entities move up, it is very important to guard our reputation. Our reputational risk comes from not only, getting penalized, rebuked, or given some kind of, negative way from regulators who are there or statutory bodies which are there, but also in terms of our customer and the association which you have. So reputational risk is also another risk which all of us have to look at in terms of guarding them and seeing that we maintain the reputation which is there. So broadly to speak, if we have to look at creating multiple unicorns in this country, before unicorns, you have to create unicorns, and then, or generally speaking, if value has to be created by small enterprises as they move up, risk management, of course, is a very important area which all of us have to take it seriously. And this is where I am looking at PRMIA. That PRMIA, takes it to the startup enterprises who are there, create support groups from them, create specialized people who work along with them. If we can all do it together, then I think there is no reason where this country will not bloom with unicorns in the near future. I am not talking about long-term future, in the near future. There is absolutely a lot of potential in this country. We are poised at a time where we are at that point, or at that inflection point where where the country is bound to go up. Forget about the geopolitical events which are happening. Forget about this pandemic. This too shall also pass. But in the longer run, if you look at it, yes, all the specific ingredients which are there is in the favor of this country. I spoke about the demographic profile. I spoke about how it has evolved over a period of time, how things are, so many bright minds. So it is very much possible that this country will bloom with unicorns. Why unicorns? Decacorns also moving forward. And this is where I think if PRMIA can come together and all of us come together, we will make it successful. So this is broadly from my side. Thank you so much. And thank you for giving an opportunity to interact with you this evening. If anything is there to interact, I'll be too happy to gladly look at having a conversation. Thank you.
Thank you, Sidharth Rai. Really, it is your speech is not a speech, it's a practical experience you have spoken to the audience. I think we need many hours to know more from you. Possibly you can have a separate discussion one-to-one or with a separate group. And we are really enlightened with your remarks, how the risk is mitigated, reduced, and you are also focused on the insurance, which is my pet area. When I work for the Howden Group, Howden